Bitcoin fell 3%, while the S&P hit a record high. That gap is not noise, it's a warning about available cash in the market. Monday, August 17th, 2026. Today's agenda, the story, numbers fast, what nobody's saying tomorrow. Up next, the numbers fast. The S&P 500 closed at a record high on Thursday, crossed 7,800 for the first time, and finished the week with a third straight gain. The price swings index fell to its lowest level of this year. Two inflation reports landed cool. Odds of a Federal Reserve rate hike next month dropped from roughly 55% to roughly 34% in a single week. Every one of those should have been fuel for Bitcoin. Bitcoin fell anyway, down about 3%, and it opens Monday near $63,000. That gap is the story. When every other risk asset rallies and crypto alone sits it out, the problem is not the Federal Reserve. The problem is inside crypto. Three things happened at once. Money left the American spot Bitcoin funds on 4 of 5 trading days. Spot volume across the major exchanges collapsed in July, on every venue tracked, without exception. And the regulatory calendar, that was supposed to deliver clarity this month, slipped twice in the same week. None of that means Bitcoin is broken. It means Bitcoin is thin and unloved at the exact moment stocks are neither. What follows is the tape, the central bank calendar, the energy shock, and the thing that happened on Friday afternoon that almost nobody put on a front page. But why did regulators cancel a meeting while approving something else? That contradiction is next in our What Nobody's Saying chapter. Start with the scoreboard. Bitcoin sits near $63,000 after a week that opened above $65,000, tagged a high just past $65,100, and bottomed near $62,500. Net move down roughly 3%. Ethereum is near $1,880 and keeps failing to hold $1,900. XRP is defending $1. Investor mood gauges disagree, and that is worth saying plainly. The coin market cap fear and greed reading sits at 37, in fear, down from 46 a week ago. A separate tracker puts the same market at 45 and calls it neutral. Take the direction, not the decimal. Now the contrast. The S&P 500 finished Friday at 7,786, down 0.2 on the day, but up for a third consecutive week. The Nasdaq Composite ended near 26,730. The Dow was the laggard, off 0.6 on the week. The 10-year Treasury yield closed near 4.7%, the 2-year near 4.2%. The price swings index sits around 14.5. The levels: resistance at 64,000, then 65,000. Support at 62,500, then 62,000 flat. Absent a trigger, that band is the expected range. That brings us to tomorrow and my call. On Friday afternoon, 2 federal agencies issued opposing stances on crypto within hours, though only one drew headlines. The Securities and Exchange Commission canceled its scheduled rulemaking meeting under Chairman Paul Atkins. That session would have established a tailored offering path for certain token sales. Citing an unforeseen scheduling issue, the agency set no new date. Markets widely read this as a setback. However, the proposal is not dead. It cleared internal review on Wednesday and remains logged in the federal regulatory pipeline as pending with no legal deadline. A canceled meeting reflects only a calendar problem. A withdrawn proposal would be a policy problem. This distinction changes how the week reads. Simultaneously, at another agency, the Office of the Comptroller of the Currency granted conditional approval for a national trust bank charter to a stablecoin issuer. 2 cautions apply. A national trust bank is not a full commercial bank. It takes no insured deposits and carries no deposit insurance. The approval includes conditions such as a minimum capital floor. Additionally, the move is contested. Senator Elizabeth Warren argues this wave of charters exceeds agency authority, noting that the applicant is co-founded by members of the president's family. Regarding assets, Norway's sovereign wealth fund now holds the equivalent of more than 11,500 Bitcoin indirectly, an all-time high, and a 6th straight increase driven almost entirely by one corporate holder. Yet as a share of total assets, that exposure fell despite the record coin count. Both facts are true. Inflation data showed July consumer prices was little changed on the month, and 3.4% on the year, down from 3.5%, in line with expectations. Producer prices were flat outright when a small increase was expected. The American economy shed 23,000 jobs in July against a forecast of 80,000 added, while retail sales fell by 0.6%. Preliminary University of Michigan, investor mood dropped to 51 from 55. explaining why hike odds fell. The policy rate sits between 3% and 3.25%. At the July meeting, 3 committee members dissented, arguing for a hike rather than a hold. This account is the week's main event. The Fed statement publishes Wednesday at 2 p.m. Eastern Time. Flash purchasing manager surveys land Friday. Then Jackson Hole opens on the 27th, with Kevin Warsh delivering his first keynote as chair on the 28th. The rate decision itself occurs September 16th. Here is my final summary of the day's moves before we sign off. Biggest risk first, $62,000 is the level. Positioning on the largest exchange leans close to 2-to-1 long, so a decisive break there does not stop politely. The path underneath opens toward 58 to 60,000, and thin summer books make that trip faster than it should be. Biggest opportunity. Reclaiming 63,500 and then clearing 64,000 would end 4 weeks of lower highs. Above 65,000 the range breaks upward, and a fear reading in the mid-30s has room to unwind. Neither move is a forecast. Both are conditions. 3 things to watch. 1. Wednesday, the July Federal Reserve minutes at 2 in the afternoon Eastern, with a White House meeting involving crypto and prediction market firms the same day. 2. Thursday, the Commodity Futures Trading Commission holds its first Innovation Advisory meeting at 1 in the afternoon Eastern. 3. Friday's Flash Purchasing Manager surveys, the last major data before Jackson Hole opens on the 27th. 1 call, falsifiable by the weekend. I expect Bitcoin to still be trading inside $62,000 to $65,000 when Wall Street closes on Friday. Bitcoin fell 3% today, while the S&P 500 closed at a record high of 7,800. That gap is not noise. It's a warning about available cash in the market drying up inside crypto specifically. The SEC canceled its rulemaking meeting.